Is NVIDIA stock a bubble? And if it's not, then why's it gone up so much? Well, a lot of people certainly think that NVIDIA is in a bubble. Here's an example. RJR Capital from X, formerly known as Twitter. Here's a wild one. Google net income is greater than NVIDIA's revenue, but yet NVIDIA's market cap is 40% larger. Some will argue that's because of NVIDIA's growth. However, forecast for the current quarter is 8.1% revenue growth for NVIDIA and 13.5% for Google. You're being sold a bill of goods with NVIDIA. I'm not telling anyone to short it here, but if you're long, protect your profits. This parabola is no different than AMC or GME. Did you get that? Shares in the chip supplier to the artificial intelligence industry are equivalent to two of the best-known Ponzi schemes in recent stock market history. Nevertheless, if you look at NVIDIA's stock chart, you will notice that it does have a parabolic kind of shape to it. So, RJR's claim is at least worth investigating. So, what is a bubble? Well, I'm looking at two definitions right now. First, from EconLib. If an asset is persistently trading at a price higher than its fundamental value, we would say that its price exhibits a bubble and that the asset is overvalued by an amount equal to the bubble, the difference between the asset's trading price and its fundamental value. And a second definition from Investopedia, an economic bubble occurs any time that the price of a good rises above the item's real value. Fundamental, real value. These are terms that are key to describing something accurately as a bubble. What these concepts are getting at is a concept known as intrinsic value, which is the discounted value of a company's cash flows over a period of years, discounted back to the present. Basically, if you knew exactly what a company was going to earn, you could simply add up each year's earnings or free cash flow and say that that is what the company is worth. Of course, investments also have opportunity costs, known as typically the treasury yield, and we have to adjust these amounts for the opportunity cost, each one being compounded by the same number of years as the cash flow being measured. If the future value of these discounted cash flows rises 1,000%, then a stock's price is perfectly justified in rising 1,000% as well, because the growth rate in the actual company, that is, the growth rate in the cash flows that can be used to pay for buybacks and dividends, is growing very rapidly. Let's just imagine that the shares of Company A are currently being valued at $10 in the market. And let's assume that this market is strong form efficient, meaning that the current valuation is the correct one. If tomorrow it comes out that that company is going to earn $1 million per share and the stock rises to $110 in just one day, that 1,000% one-day rally is actually not adequate for the stock to become fully valued, because we're expecting a much more than 11-fold rise in the company's actual profits, and those profits are what are used to pay for dividends and buybacks. What does this have to do with NVIDIA? Well, look at this chart. That is a Y chart that shows NVIDIA's stock price and its diluted earnings per share, meaning the amount of profit that the company earns divided by the number of shares outstanding, and they're basically identical. The stock has gone up almost the exact same amount that the underlying earnings have gone up. Of course, the fact that NVIDIA's stock chart is well supported by its earnings per share chart doesn't mean that it's not a bubble. It's possible that the stock was overvalued to begin with based on knowledge available at the time, and earnings per share and stock price moving in tandem since then would still produce overvaluation. However, we can look at earnings multiples and see that NVIDIA is not the most expensive stock on the market. Here's an example of some multiples from Seeking Alpha. The most instructive would be forward GAAP earnings. True, the stock is valued at 67 times trailing earnings, meaning last year's earnings. However, the forward PE ratio is 36, and to put that into perspective, the value investor fan favorite stock, Costco, is valued at 45 times forward earnings. So, if the forecast that went into coming up with these forward estimates, remember, forward earnings are always estimates, it's not a hard fact, then NVIDIA is cheaper than Costco. But what about the whole 8.3% growth thing? Didn't RJR Capital say that NVIDIA's earnings are only expected to grow 8.3% when Google's are expected to grow 13.5%? Is he making it up here, or what is it? No, but what he's doing is he's comparing quarter over quarter earnings, that is December quarter earnings to March quarter earnings, to Google's year-over-year earnings. It's to be expected that NVIDIA's quarter-over-quarter growth rate would slow down this quarter. Last quarter, its growth rate was 200%. So, does all of this mean that you should go out and buy NVIDIA stock right now? No. It might surprise you based on the tone of this video, but I've actually been pretty cautious about NVIDIA the entire time it's been rising. I never bought the stock directly, and I only briefly held Taiwan Semiconductor as a kind of cheaper alternative to getting some exposure. Taiwan Semiconductor being, of course, NVIDIA's contract manufacturer. NVIDIA stock does have very high multiples, and its earnings growth is expected to slow down this year. If it slows down more than expected, then investors may not be able to recover the amount that they invested in it. On the other hand, this company is pretty much a monopoly on high-end AI accelerator chips. There are other companies making AI chips, but none of them can handle the workloads that NVIDIA's H100 and A100 chips can. Google made its own tensor processing unit that reportedly was able to beat the A100 on some tasks. However, NVIDIA's H100 chip came out just afterwards. And just recently on an earnings call, Michael Dell leaked that the next line of NVIDIA AI chips, the B100, is coming out shortly. So we have here a company that is essentially a monopoly in the world's hottest industry, that is, generative AI, and nobody seems to be able to come up with anything that can compete with its products. It looks like NVIDIA is going to enjoy this dominant market position for a while to come, and if you've read any of the news articles about AI lately, it looks like that industry's growth is going to be high for a long time to come. Am I going to buy NVIDIA stock? No, I have no intention of doing so. However, if someone put a gun to my head and forced me to take a position in NVIDIA, I would choose long over short any day of the week. Should NVIDIA be worth 40% more than Google? Well, its trailing 12-month earnings are $29.7 billion, whereas the same metric for Google is $73 billion. If these companies were not to grow, then Google would certainly be the more modestly valued stock. However, they're both growing, NVIDIA more rapidly, at least on a year-over-year basis, and Google is among the cheapest big tech stocks outside of China right now. The fact that NVIDIA is worth more than Google at today's prices doesn't mean that it's in a bubble. On the other hand, there is enough of a case to be made for overvaluation here that perhaps at this point, investors might want to either avoid the stock or maybe hold it at a very small portfolio weighting. I certainly wouldn't be going all in on NVIDIA today, but I definitely wouldn't be shorting it.